Good morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm Emily Parker, filling in this week for Christine Lee and Lawrence Lewiden. So let's start by taking a look at Bitcoin. Today right now we have the CoinDesk Bitcoin Price Index, XBX, at 51,306. That is up a little more, 1.78% over the past 24 hours. And turning to Ether, the CoinDesk Ether Price Index, ETX, is currently at $4,087. That's a little less than 1% up over the past 24 hours. And then finally, looking at the CoinDesk DeFi Index, DFX, that's at 530. It looks like, wow, that's up around 31%. Okay. Sorry, let me refresh this real quick. CoinDesk DFX Index is at 499. That's down a little over 4.5% over the past 24 hours.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
So the drop in crypto markets prompted almost $300 million in liquidations across several crypto futures. What's going on in the markets? What factors are driving price action right now? Let's turn to our first guest to discuss is Allbridge co-founder Andriy Velykyy. Good morning, Andriy.
Good morning. Good morning. Thank you so much for inviting. Pleasure to be here.
Thank you so much for coming on the holiday week and on, the real end of 2021. It's a perfect timing to discuss what's coming up next year. So let's start with that. We've had a crazy year in crypto, total roller coaster across the markets. Let's talk a little bit. Let's just start going straight into the future. What are you looking at for 2022? What are some of the big trends that you are anticipating either in Bitcoin or in altcoins or just in anything? What are the big stories to watch out for?
I may be a little bit biased because we are the bridge connecting blockchains together. But generally speaking, I see a high demand for multi-chain technologies. People are constantly looking for ways to use the best of various blockchains. Other than that, of course, NFT is really hyped right now, as well as Metaverse is developing rapidly, and we will for sure see more about those techs in the next year.
So when you say multi-chain technology, something that comes to mind immediately is something like Polkadot, right? Or is that what you mean? Do you anticipate that we're going to see a lot of action in blockchain technologies that specialize in that kind of bridging technology?
I generally mean that people are tending to use more than a single blockchain for a number of reasons. And we see high demand for crossing from one chain to the other. So this particular service, it's becoming more and more popular. And also we see that a lot of other bridges are developing in the blockchain field. And while most of them support currently mostly Ether-like networks, it's machine enabling ones, but also there is a lot of growing interest for non-EVM chains, namely Solana has been showing us huge growth in this particular year, and we hope it would continue. I would also like probably to mention Near and Terra, which are also non-EVM-like, but they're growing fast, and a lot of users are going there and exploring the possibilities that they provide.
Interesting. Okay. And then just looking kind of at the larger market, looking at Bitcoin or Ether, what do you see as some of the main factors that could move price in 2022? So over this year, we saw various things. We saw regulatory news, for example. We saw the first ever Bitcoin futures ETF in the United States. Many people attributed these factors to pushing up the price. We saw Elon Musk doing all sorts of things on social media. So what are some of the possible causes that you're looking at next year that you think could move the price up or down?
Well, if we do believe that the history repeats itself and crypto market goes in sort of circles we see that after the Bitcoin price raises high so rapidly, like it did right now in this year, and like it did before, let's say in 2017, at the previous bull market, we generally tend to expect that crypto market will cool down a little bit, showing correction after such high growth. Maybe we are already in this particular phase. On the other hand, we see how much money has been, created and thrown into the market during the last year, during the last probably, and that inflation will enable people to seek other opportunities that are not so, that doesn't carry that much of inflation risks. And Bitcoin is a really, really good answer, really safe haven where capital can find its place and move to it. And the more money flows into crypto, then obviously the higher price gains we will see. So it's like, it's
so when you
sort of balance.
Yeah. When you talk about cooling down, though, or a correction, what kind of thing do you think would be likely to cause that, right? Because I think it's changed a little bit. Like in the past, it used to be that, China said something and then, Bitcoin crashed, and that's not really happening so much anymore. So is there anything in particular that you see as a risk factor that investors should be looking at that could cause a correction or a cooling off in 2022?
I mostly see regulatory risks that countries would tend to regulate crypto in general, and such parts of crypto ecosystem which are vital to today's market, like decentralized finance, which currently raises a lot of questions about how it should be regulated, how it should be done, and whether it is possible on the technical side at all. And those things relate that potentially affect the market in the wrong way. Let's say tomorrow, it's sort of imagination maybe on my side, but if we hear the news that from now on, Uniswap has everyone to pass KYC check, I'm not even sure how that would be possible based on how it works, right? We just need an Ether address. But let's say some governments will say you have to do this KYC check, otherwise we will just ban you or do some other sort of legal restrictions. And that potentially can be really bad news for the crypto market.
Yeah, we're hearing a lot of people talk about those kinds of risks going forward. So just to shift perspective for a moment, I understand that you're in Ukraine now, which is a very unique perspective. And CoinDesk reported, I believe in 2020, and it was based on Chainalysis data, that Ukraine was at the top for global crypto adoption. It was a very surprising statistic. I don't think people really know how much crypto adoption there is in Ukraine. But I think that was in 2020. What is the situation there now? Is Ukraine still this kind of, paradise for crypto developers? And is it still kind of like a hotspot for crypto activity?
Yes, it's definitely a hotspot for crypto activity, and we see growing interest for crypto in general, and it's like booming from year to year. There are several reasons for that. First one is we have a lot of people with very strong technical background, so for the users, it's easier to grasp how they can use the crypto because of the education. The other important issue is that the average salary here in Ukraine is quite small, and that makes people look for probably more risky but more rewarding opportunities on the market. And because the general fund market here, it's not really popular, crypto seems like the best place for people to jump in. And also, I should probably mention that in Ukraine, historically, people don't really trust a lot the banking system because it failed people multiple times. So they also are trying to find some sort of alternative, which definitely crypto provides.
That's a really interesting point. That's an explanation for why crypto is booming in a lot of countries around the world, in particular in regions like Latin America, like a lack of trust in the banking system or a lack of trust in government. So just finally on Ukraine, as we also know, there's been some geopolitical tension in that region, namely with Russia. Does that have any impact at all on crypto adoption, either positive or negative? Because I could see it going in either direction, right? On the one hand, perhaps it would cause people to look at crypto as a kind of safe haven, but it might potentially also scare off some investors, or maybe it doesn't have an impact at all. How does geopolitical tensions fit into the Ukraine crypto story?
I would say that more and more Ukrainians are thinking what they will do in terms if situation gets really ugly. How easy is to flee the country I hope that doesn't happen, but if the war is here on the streets, then of course having crypto on your laptop or on your hardware wallet and taking it with you makes the process of escaping the country with your assets much easier compared with if you have a house or a flat or some, I don't know, maybe gold even, right? I don't think it is easy to run away with a lot of gold in your hands compared to crypto, of course.
Andriy, thank you so much. We're so lucky to have your unique perspective, and I wish you a very happy new year.
Thank you. I wish you a happy new year too. Thank you so much for inviting. Happy to be here again. Thank you.
Thank you. Okay. So coming up, a look back at the year in crypto regulation.
Hi, I'm Christine Lee.
Zach Seward.
I'm Michael Casey.
I'm Christy Harkin.
I'm Isaiah Jackson.
I'm Serena Lynn.
Hey, this is Will Foxley.
I'm Teresa Santos.
Hi, I'm Lawrence Lewitton.
Hi, I'm Dorian Wayne.
I'm Nicholas Day.
Hi, I'm Kevin Worth.
My name is Naomi Brockwell.
I'm Jordan Muthra.
Hi, I'm Galen Moore.
Hi, I'm Brad Count.
I'm Pete Paschal.
Hi, I'm Jen Sanasi.
You're watching. And you are watching.
And you're watching CoinDesk TV.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Welcome back. In today's CoinDesk Spotlight, here's a look back at notable 2021 moments in crypto regulation and policy on CoinDesk TV. It has been a long, strange, and jam-packed year, so let's take a look now.
I became interested in Bitcoin when I became concerned about the compilation of debt that we're doing and racking up in the Congress. And currently, we're going to add another 1.9 trillion to the debt with this current COVID stimulus bill, when there's still $1 trillion from the last 5 COVID bills that have not been spent. So to me, this just looks like piling on debt for no good reason.
We're ready for an traded product, and so I would like to see an exchange traded product move forward. Of course, the facts and circumstances matter, but I think people are looking for ways through our regulated securities markets to access Bitcoin. And so if we don't give them the natural way, which I think would be an exchange traded product, they're going to look for other ways to do it.
The number one way to stop regulatory arbitrage is for the agencies to cooperate and to get on the same page and to basically lock arms as to what the vision is for going forward. And I think that's really, really important. We all have our individual mandates. That's not going to change, but we can coordinate on how we do that. The PWG report on stablecoins is a great example of how we can do that. We came together. We basically said, okay, how are we thinking about the risks? How are we thinking about the recommendations? Let's do that together. And what that does is it prevents us from basically setting up our own sets of rules and then getting arbitraged by players out there who want to pick and choose from different parts of those rules. This, I think, provides a healthier way to move forward.
They're having a new look at the cryptocurrency situation in China, more specifically mining, and also the legacy stuff, which is the trading, exchanges, the leverage trading, and so on and so forth. So the new aspect is they have announced their intention to really enforce it to a stricter degree.
So on that news, of course, we have Bitcoin dumping 4% and a whole lot of red across the broader market.
Where you see that the hash rate dropped quite significantly towards the end of June. That was with the first round of major crackdowns within China.
So I think OTC platforms that are operated from the big exchanges, the Huobi and so on, and Binance, they will close down. They will stop offering their services to the Chinese mainland users.
The government may have banned Bitcoin
in Nigeria, but it didn't stop Bitcoin in Nigeria. All it shows us is that in other countries and other places, they have problems that Bitcoin actually solves. Because when you have a government that is standing against its people and its freedom and the freedom of the people to be able to transact in whatever they want to transact in, you see why Bitcoin even exists, right? And that government should not take away their freedom to right to speech, right? And because that's really what it is. Code is just speech. It's actually a way to communicate. So yeah, man, I think that's what's going to happen around the globe. You can't stop Bitcoin, so the governments are going to have to learn globally to adopt and adapt.
Today and probably for a few days, people may also think that Bitcoin is banned in Turkey, and they may want to get their funds out in Turkish lira terms, or at least they want to make sure that their bank is still accepting those Turkish lira transfers. And when they see it today, tomorrow, or next few days, I believe they will also understand buying into Bitcoin and holding it or trading it or speculating it is still free, just like it was yesterday. And even today,
I think everything started in 2018, where just like federal bank, you have RBI in India, which sort of had a banking ban, which basically stopped all the banks from dealing with any entities that is dealing in cryptocurrency. So that was the first news, and that came into place. So basically, exchanges like WazirX and any other exchange cannot have a bank account to operate for the escrow of fiat. And just recently, 2021, is when the government has started working on a newer bill. And what is happening is now and then, there is an overlap of the old bill that was sort of structured. So, sometimes media takes some information out and, throws it in front. And there's also a new bill that has been in progress, right? So we don't know everything about it. But definitely we know that the overall intent of the new bill is towards better regulation.
We're very enthusiastic as a government and President Bukele leadership. And we understand that he wants to move El Salvador to a different level. And that's why we implemented the Bitcoin law and the Bitcoin as a legal tender in El Salvador. And also the plans are, big. We're wanting to build the Bitcoin city in which you can invest, have a lot of advantages to live in. And it's going to be a city of the future. And I know the concerns here in Washington, D.C. is about losing power, losing the power of the dollar. And we can understand that. But El Salvador has to move on. And El Salvador is wanted to, as I said, to be in a different level.
Yeah, I mean, he's a friend. And, we're sort of one-upping each other, understanding that, there's a finite amount of capital in the world. There's a finite amount of talent in the world. And, we, even though we don't necessarily feel everything is mutually exclusive, obviously when things like, was mentioned in the program, when China shuts down mining, Bitcoin mining, or Bitcoin generally, that's a huge strategic opportunity for the United States. And that's something that we as cities should all partake in. But I think there's also this friendly rivalry among cities to be sort of the first at, being, the Web 3.0 city. And certainly in Miami, as you know, prior to the mayor of New York becoming mayor, I was talking about, posting Satoshi's white paper on our website, allowing our employees to get paid in Bitcoin, allowing our residents to pay for fees and taxes in Bitcoin. And of course, I was the first elected official in America to pledge to take their salary in Bitcoin.
Well, we're not quite Miami yet, but I think it doesn't have to be large cities. And I think that this trend and this transition is going to have to be led from the municipal or the local level on up to get that mass adoption and to see the opportunity and the benefits of utilizing Bitcoin.
And if you look nationwide at this point, really, we as a nation have to understand what digital assets are going to do to our economy. If you look at any of these factors like inflation and so on, there's just so many more ways to have to look at it, ways to measure that we really can't get a beat on that now. So the faster we can get regulation in place, the faster we can get the federal government to understand what the benefit of these things are, the better off we're going to be as a nation.
It's not at all clear to me that the SEC has a role in regulating cryptocurrencies. Cryptocurrencies are not securities, and the SEC regulates securities. So That's not at all clear to me that follows. And I'll be watching very, very closely to see what the SEC does.
I mean, in some sense, the stable coins are a more exciting option than a central bank digital currency. They're competing stable coins now, and so I think that they can function in a very similar way to a government-run currency, and don't have the same kinds of privacy concerns that a government CBDC might have.
Now, when you get to digital currency issued by a government, obviously that will ultimately probably supplant Tether. And for a lot of good reasons. One is just that it's going to be much easier for many banks and financial institutions and companies to hold something issued by, let's say, the Chinese government or the US government versus something that's held by a private company. And a private company that sometimes is its own worst enemy. I mean, how hard is it to get an audit done?
The new infrastructure deal, we thought it was going to just be about choo-choos and fixing roads. Turns out there's a whole thing about crypto in there.
They're hoping to raise $28 billion to help fund other aspects of the bill. And the expanded definitions seem to be the main cause for concern amongst a lot of the folks in the industry.
We've been talking about it for a number of days. This is a subject that very few members of the Senate know about. It's just not on their radars.
Now that the infrastructure bill has been signed into law, the next step is there will be a rulemaking. And we are working with Treasury and IRS to try to keep that as narrowly tailored as possible and focus on centralized exchanges. So that's going to be a priority for us.
I think regulating the centralized exchanges who are already regulated, right, and making sure that they have clear guidance on what tax reporting they should be doing on behalf of their customers. Embracing something like a safe harbor that Commissioner Peirce at the SEC has proposed and is very thoughtful about. It replicates much of what you'd expect from a public company filing in the US, but acknowledging the unique properties of some of these assets. So those are just kind of three areas of low-hanging fruit that I think would go a long way.
I guess that's the major challenge ahead, regulatory challenges.
It really is. And, it's a messy world. There's 195 countries out there, and, each one is sort of separately exploring what their, regulatory framework for crypto is going to look like. And so we're sort of trying to stay abreast of all of them. And, apply wherever seems appropriate.
So as we've seen, a lot happened in 2021, and I have a feeling we're going to see even more news on the crypto policy and regulation front next year. So stay tuned to First Mover. That's it for today. I'm Emily Parker. Coming up tomorrow, Christine Lee has a special interview with venture capital legend Bill Tai. The Hash is off this week. Coming up at 3 p.m. is all about Bitcoin with Galen Moore. You're watching CoinDesk TV.